What's up, guys? Bulls and the Bears here with the midweek update video with the wheel strategy. So what's going on with the wheel strategy this week? Well, not a ton. Still sitting in a lot of cash just because I'm not finding a ton of great opportunities. I do have a couple opportunities, one with SOFI, one with Under Armour, but I'm not putting my entire allotment into these positions just yet, just because I'm a little bit cautious. So we'll talk about that. The account's over 22,000 still, up a little bit today, up $18. I think we were down a little bit yesterday. Pretty flat on the 1 week look. Get a little closer here. On a 1 week look, I mean, we're pretty flat since really Friday to today. So yesterday, today, Monday, all pretty flat. But don't have a ton going on either. Here's the positions. Mosaic, still have 100 shares, still rocking and rolling with that. I have a covered call sold up here, 32.50 call. That's not new news or anything. SOFI, 100 shares at 750. I sold a call. I actually closed. I sold another put at 7 and another put at 650. And then 2 puts sold on Under Armour. So let's get into the chart so I can show you guys exactly what I was seeing when opening these positions and what I'm looking for. And what I collected, obviously. So here's TradingView. Let's go to Mosaic first. This is probably going to be a quick video, not a ton going on. Mosaic is just a position I've continued to be in. This isn't anything new. Here's a daily chart, just stuck in this range. But at the very least, it's not down here. I'm glad the range is up here, you know, at or above my cost basis of $31 per share. That's encouraging. But it's not encouraging to see it constantly fail to break out of it. I mean, look at these wicks right here, and right here. Just all of them wicking, failing to get above and stay above that level of about 32.50. I am encouraged, though, because especially these last few days staying up here, we're not getting really below $31.80. So we're starting to get tighter and tighter towards the upper bound of the range, which is great. But obviously, if the bulls run out of steam, it could easily come back down. I just really need them to break out already and get above 32.50. That's where I have my covered call sold at 32.50. I have a net credit over the course of 3 weeks that's been accumulating as I've been rolling the calls. I have a net credit of 79 cents that I'm looking to profit on this week. I wouldn't mind getting assigned, but basically this has been just chugging along. And you know, tomorrow, Thursday, that's when I give myself the green light to roll options because it's pretty close to expiration. A lot of that intrinsic value has been taken out of the contract. I will look to possibly roll the call if I can. This has been giving me the opportunity to roll every single week the past few weeks because it's been trending higher. Definitely trending higher, as you can see here. But it's also not like ripping up either. It's trending higher, but yet staying near or below my covered call. So I'm always able to roll it out and up. It's been very nice. I started at 31.50. My first call was at 31.50, then I rolled it out and up to 32, then out and up to 32.50, all for pretty good credits, pretty good net credits. So if we are still around here and trickle up a little bit higher, and this, all of a sudden it's Thursday, Friday, I'll be probably able to roll the call out and up to 33 and just continue to follow this thing higher. But we'll see. We'll see. Now let's get into some nitty gritty stuff with SOFI. SOFI, a new position I've been working with. So here's the bigger daily chart here. You can see the range I'm trying to play. All these lines here are where my positions are. So the blue line is my cost basis on 100 shares. The pink line is my break even on those 100 shares. And then the 2 yellow lines are cash secured puts that I have sold. So let's get a little closer now to the 30-minute chart. So here's my cost basis way up here at 750. We are underwater, down about 50 cents. And to start the week, SOFI had this drop. And I ended up selling 650 puts. Now, mind you, let me explain the situation here. SOFI, the position it's a very cheap stock, and I have 100 shares. It's a very, very small position. Because let's think about it. I got in at 750, bought 100 shares, so 750 times 100. I only have $750 in this position. That's it. Each position that I have in my portfolio, I am allowed to go up to $5,000 because I want to have around at least four positions, and with a $20,000 account and four positions, that means each position could be $5,000. That's usually what I've been doing. Like with JD, I had 200 shares, which is about $4,600. Mosaic, I have $3,100 in it. CSIQ, I had $4,000 something in it. So I've been in line with that. But this, we're under 1,000 because I am a little bit skeptical in this. I have some excitement with SOFI, but a little bit of hesitation as well because it's been showing some weakness, and I know how far down it can go. So I'm like, I just want to get my toes wet at 750. And that's what I did with only $750. Now I have the ability to continue to sell puts because, again, I can get up to $5,000 in this position, which means, let's say an average of like $7 a share, I can have up to 700 shares pretty much of SOFI. That's my max position. That's my full position is 700 shares. I only have 100, so I have a lot of room to work with. The ability to sell puts and sell calls now because I own some shares, so we're just taking this very slow. But moral of the story is I can hold up to 700 shares and I only have 100. So I sold 2 more puts at 650. I got 5 cents each. Now again, that's very small. 5 cents? You're collecting $5 per contract? Is it even worth it? My goal, my strategy is to earn 30% annualized on an annual basis, a 30% return on my capital deployed. And by selling a put at 650, I'm deploying $650. Now, what's 30% of $650? So multiply that by 0.3. That's $195. That means if I make $195 for over 12 months, for the whole year, if I make $195 on that 650, I have made 30% on an annual basis. So how much do I need to make every week to get $195 over the course of a year? Well, you divide that by 52, because there's 52 weeks in a year, and you get $3.75. So all I need to do is earn at least $3.75 on this $650 every week to yield 30% annualized. And I got $5. So although $5 is very small, probably the cheapest you can find when you're selling options, and ultimately seems like a stupid thing to do, when you really factor in just how much or just how little cash I'm putting up to earn that $5, it actually turns out to be a good return. So for example, $5, if I got $5 a week, that'd be $260 a year divided by the $650 I'm using for that, it'd be 40%. So this is a 40% annualized return, this $5. So basically, it's worth it. So I got $5 for it. I sold 2 puts at 650. SOFI's been chilling around 7. Now, unfortunately, it's been struggling to stay above 7. You can see every single time it seems to kind of reject here, and it rejected here for a second. Now we're pushing up. This is live, by the way. It's only noontime, so live price action. SOFI just broke out of 7, got as high as 705. That's good. But you can see just the struggle around the $7 mark. And you might notice there's a line at $7. That's because I ended up selling an additional put after the 650 puts. The 650 puts are where I sold originally on Monday morning. And then I decided, you know, 650 seems pretty far. I wouldn't mind getting a little bit more shares at 7. I think $7 is a nice cost basis to go for. Right now I'm at 750 with my shares. I wouldn't mind to kind of get that lowered down to at least $7 and ideally lower. So I'm going to take a stab at 7. Now, when I sold the put, I actually did a little bit of interesting maneuver here. I actually sold the $7 put when SOFI was at 690. So right around here. So I sold an in-the-money put. when I did this. The $7 put was in the money and I sold it anyway. That's very unusual with the wheel strategy. Usually you're selling an out of the money put. Maybe being most aggressive, you're selling an at the money put. This was in the money. In the money. I mean, it was almost at the money. I mean, it was the closest strike for sure, but it was technically in the money, and that's usually an odd thing to do. But like I said, I have a lot of room to work with. I have a lot of shares left to accumulate, so I have no problem selling a put here, trying to grab some shares at 7. And the fact that I got paid a really big credit for it, I got 25 cents for it, it actually made it a pretty decent proposition. Now with an in the money put, you got to factor in that intrinsic value. SOFI was at 690, so that means the put was 10 cents in the money. So that means 10 cents of the premium that I collected is intrinsic value, and therefore not really a benefit to me, because all things being equal, if I got assigned at 7 and SOFI stayed at 690, I'd be down $10 a share. And that's where that 10 cents in the premium comes from, is the loss I'd be assuming. So at 10 cents of the premium, it kind of cancels out the loss that I would be taking by taking shares there. So that doesn't really count. That's the intrinsic value. The extrinsic value is what we try to capture when we sell options. That's really all we stand to gain in terms of a profit, a net profit standpoint. And if 10 cents was intrinsic value, that means the rest, which is 15 cents, was extrinsic. And 15 cents is very good. I mean, I just showed you how 5 cents, collecting 5 cents was really good. With the $7 put, I got 15 cents of extrinsic value, which is phenomenal. Now, it was a risky kind of thing because it was in the money at the time. So yeah, I'm going to get paid a bunch. But again, I don't mind getting shares at 7. That's kind of the point. But if for some reason SOFI, like right here, ends up going above 7 and closing above 7 on the week, because it ends up having some strength and coming back, and this put expires worthless, well, then I just got away with highway robbery. Selling an in-the-money put that ultimately expires out of the money, and I keep all of that premium as profit. That would be amazing. I would kind of be a little disappointed not getting some shares down here and lowering my cost basis, but at the same time, profiting that $25 for free and having the ability to do it all over again the next week would be a pretty cool situation. So I also sold a covered call at 750. Forgot to mention that. 750 is my cost basis, so it was right at my cost basis on my 100 shares. I sold it for 6 cents, which is good. Just take my word for it. It's good premium. And SOFI was weak. I mean, it sold off to $6.80 yesterday, and I ended up closing the covered call. The covered call went from 6 cents to 2 cents, and I closed it, profited 4 cents, and which is $4 profit. Very, very small. Again, I know that. Very small profit, a $4 profit. Nothing really too exciting to hear, but in reality, it actually is a good return on this position of $750. So I was okay with that. Now my shares are naked. They're not capped by a covered call. So if SOFI decides to run up today and tomorrow, that'll give me another opportunity to sell calls and or just let my shares run free. Who knows? But right now, I do not have a covered call sold on this. I did. I closed it. And now we're sitting here waiting to see what SOFI does. Lastly, we have Under Armour. This one, just like last week, I sold the $7 put. Just like I did last week. Yes. So right around here, this was last Thursday, had a massive crash. I decided to take a stab at it because when I looked at the weekly chart, I mean, right where it is, $7 mark, you can see the support. You can see the support that's been had there, not only the past year, but even back in COVID. The COVID lows were about $7. And then you go back all the way over here, just keep scrolling left. Back in 2011, $7 was a bottom too. So to me, that looked like a really good level from a chart perspective. And then I looked into the fundamentals, and the balance sheet seemed fine. The debt to assets were favorable. They were making money. I really assumed that they were going to have a net loss, and that's why they've been getting crushed so much, because not all retail is really thriving. But I was shocked to see that, no, they're still profitable. They're still making money. So in that case, it checks all my boxes. Why not play it? So I sold a $7 put on this day on Thursday. Friday it stayed above 7, expired worthless. And then Monday morning this week, we opened around 7:13, dipped below 7. I ended up selling the $7 put before it got in the money and collected 12 cents for it. And right now we're at $7.20. So Under Armour's hanging in there. It's showing much better support at the $7 level than SOFI is. So yeah, I think this level is going to hold, which means I'm probably not going to get shares down here. But I'm going to keep selling puts as much as I can before it starts to go higher, and then it just kind of leaves my level in the dust and I can't play it anymore. So Under Armour, $7 level, I got 12 cents for it, and it's hanging in there so far. So that's the update, guys. Mosaic, SOFI, and Under Armour. Not a ton going on. Again, SOFI is just 100 shares with a couple more puts sold. I think overall like $2,100 in collateral is tied up in SOFI positions. Under Armour, I only sold 2 puts. That's $1,400. Again, I can get up to $5,000. So with Under Armour and SOFI, I'm taking it a little bit slow. And as a result, I'm not putting up a lot of cash. And you can see the buying power says 14,000. Cash earning interest is 14,000. So a lot of cash sitting there, but that's okay because I'm earning 5% interest. And so far, I've accrued over $23 in interest this month, which is going to be payable next week on the 29th. And that's going to continue to add up along the way. So that should be a nice little payday from interest as I wait patiently for really good setups. So that's it for the video, guys. All in all, I stand to profit $142 total on the week. That's if every option goes to 0, 142 bucks. That would be nice. That's actually exceeding my weekly target, so that's great. And I'm going to come back later this week with the weekly recap to show you guys exactly how everything ended, how everything is unfolding, and what we're going to be looking to do next week. So thanks for watching again. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.